Hey, you guys, this is Tamiya Robles. I'm your credit repair specialist expert. I am the host of my podcast, Coast to Coast Credit. I am the owner of my company, FixMyCreditNow850.com. I am the president of NAREB's High Desert chapter out here in California. And we're back with yet another live for y'all. Thank you guys for all the love and support you guys are showing us. Thank you for subscribing, scheduling consultations with us, clicking the links in the description, doing what you got to do to fix your credit or applying for a mortgage to purchase a home. Thank you for following us. Please continue to like, share, comment, subscribe. Be sure to follow both Sean and I on all of our social media platforms, especially we're big on Facebook. This is being broadcasted through YouTube, but also our NAREB High Desert Facebook page. So definitely check us out. So yeah, today we have Sean on here talking to us about the 5 common mortgage questions, and he's going to answer them. So right now I'm going to transfer it over to Sean. It's on you, Sean.
Thank you. Thank you, Tamaya. Yeah, so we're going to discuss the top 5 questions that I usually get on a daily basis about uh, buying your home or buying your first home. Sometimes I still get these questions on people's third or fourth homes. Happens all the time. Start with number one. How much home can I afford? Okay. Now, remember, this is a very vague question. It's going to depend upon where you're at in the country, right? The income that we have, right? Or what I'll be able to use for income, right? Usually we can go up to a 56.99% back end debt ratio for FHA. And what goes into debt ratio, we'll look at that too. Also on a VA loan, we can sometimes go to 74.99%, which is pretty high on the VA loan, right? Conventional capped usually about 49.99 or 50% even. Okay, so we'll look at your total outgoing credit-based obligations. So your credit cards, your student loans, even though they may be deferred, we still got to take a look at them. Okay, car payment, student loans, credit cards, anything that's basically on your credit. Okay, then we're going to look at the house itself, what the purchase price is, the property taxes, estimated homeowners insurances, mortgage insurance, any HOA dues, any condo fees, any flood, wind, or hail coverage requirements. All that's factored into your max debt to income ratio. Remember, what we use for your income, if you're a W-2 wage earner, is usually your gross income. If you are an hourly employee, you have what they call variable income. So we'll look at the last 2 years of your income. Based upon what we get on a written verification of employment, it'll break down your hourly pay, hourly rate of pay, average hours worked, okay, and use that to determine what your base gross income is that I can use to qualify you. All right. So when you're on the phone with me, we'll kind of go through some numbers, I'll ask you some questions and give you a basic number as to what I think I can approve you for based upon a verbal conversation. Right. Now remember, once I get your documents and I verify everything, the number could change. It could go up or it can go down. Right. So when we talk on the phone and I give you some basic stuff, take it with a grain of salt. I've got to see supporting documentation to determine what your actual purchase price is going to be. Numbers can vary. You may have missed some things. We may have missed some things. We have to make sure we get the docs to confirm what you can get approved for. Okay. Also, remember 2 things. You can increase the amount that you need if you add somebody with you as a co-signer or co-borrower or non-occupant co-borrower. And if we give you a high amount, that doesn't mean you've got to use every bit of that high amount. Okay, you can use as much as you want to up to that amount. But if we approve you for, we'll say, $500,000, but you only need $200,000, so be it, you can use the $200,000. Okay, now remember, the number that we give you also, it may be unaffordable. We may have to realize that, hey, you see this house that looks great on TikTok or on Facebook being advertised and you want it, but that payment may be a little bit steep. We may have to lower our expectations of what we think that we can afford. Keep that in mind. Okay. Now, number 2, the second question that I usually get is, what are different mortgage types? All right. So we got your big 4. You've got your FHA, you've got your VA, you've got your USDA, and you've got your number 5, your non-qualified or non-QM loan. So FHA, this is one of the most used loans out there, mostly for first-time home buyers that use this, okay, but not just for them. Keep that in mind. Very flexible credit qualifying terms. Remember, as you all know in my previous videos, credit scores down to 500. If your score is between 500 and 579, you need at least 10% down. If you're at 580 or above, it's 3.5% down of the purchase price. Okay, right? So if you're buying a house for $300,000, your actual 3.5% down payment is about $10,500 ballpark. Okay, keep that in mind. 3.5% of your purchase price. Now, VA loans. VA loans don't have a written credit score requirement, but it does depend upon what your actual credit profile looks like too. Like I said in my previous videos, remember, your past 12 months of your life are crucial when it comes to qualifying on a VA loan. A reestablished credit history is required on VA financing. No matter what your score is, you're looking at 100% financing. So if you're buying a house for $300,000, that's what your loan amount is going to be. It's going to cover the entire purchase price. Once again, disclaimer, depending upon what your VA eligibility is, right? In most cases, though, it'll cover the entire purchase price that we're asking for. What's not covered are the closing cost, prepaid interest, prepaid items, homeowners insurance, property taxes, etc. It covers the purchase price, but not the closing cost. It has to come out of your pocket or being paid for by the seller or a gift from someone else. Okay. Now, with the USDA loan used to be considered a low-income rural loan. Okay. Now, remember, USDA is going to have tighter front and back end debt to income ratios. So your front end ratio basically is the housing payment. So everything that's included in that, okay, divided by your monthly gross income. So with USDA, the max is going to be approximately 28%. Okay. The back end is your housing plus any of your credit-based obligations and other obligations you may have, which is child support, alimony, separate maintenance. That number can be no more than 41%. So the debt to income ratios on USDA are a little more constricted, right? But it is 100% financing, right? And sometimes, depending upon what your appraised value is, you can include some closing costs into your loan amount. All right. But that needs at least a 580 credit score and usually a clean 24-month credit history. All right. Now, we went over, and then conventional. Conventional needs at least a 620 credit score. Okay. 620. Right. If you don't have that, you will not qualify. 620 is required on the conventional side. Conventional financing can usually go up to 97%. So they'll give you a loan amount for 97% of the purchase price of the home. The other 3% can be paid for by you as a down payment assistance, or gifted from a family member. Okay. Conventional loans are usually used for homes that either A, won't pass FHA standard appraisals. Okay. 2, you may want some lighter qualification requirements on your self-employment. The seller of the home may not take FHA financing. It may apply for a flip rule. A lot of different reasons to go conventional as opposed to FHA. Okay. There may be some better programs you can qualify for outside of FHA that needs to go conventional. All right. But it is the most sought after loan out there in America. Now, the next one is the non-QM loan. So all of our people that are self-employed, let's say you're self-employed and you wrote off everything in your taxes. You told Uncle Sam you made $10 last year. I'm going to look at that tax return and say, hey, Carol, you made $10 last year. How did you survive? How did you live? How did you eat? Right? So I wouldn't qualify you for anything. Right? So what a non-QM loan does, it allows you to use alternative documentation methods. So for example, instead of me using tax returns, I can use the last 12 months of your bank statements. I'll look at your bank statements, look at your business bank statements. I will look at your bank statements. I would then look at your deposits. I would take those deposits and I would use usually varying from lender to lender, up to 70% of the deposits as your monthly gross income. Okay. I don't ask for tax returns. I don't ask for anything else regarding your taxes. I use that as face value, take it from there, and you're good to go. There are no down payment assistance programs that you can use in conjunction with non-qualified mortgages. They want to see skin in the game. Okay. So if you're self-employed, you wrote everything off on your taxes, you need down payment assistance, you need to either A, save the money up, B, wait till you save the money up. One or the other. Okay. Now, and once again, there are a lot more things that you can use to qualify, such as a profit and loss statement, a 1099, CPA letters, a lot of things you can use outside of your standard tax returns to qualify for a non-qualified mortgage. Keep that in mind. Okay. Now, I'll go over this again. Down payment. How much down payment do I need? This is the number 3 asked question that I get on a daily basis. How much down do I need? Let me stop you right there. Remember, down payment and closing cost are not the same thing. Okay? Down payment and closing cost are not the same thing. On a conventional loan, the required borrower obligation, or minimum investment, I should say, is 3% on conventional financing. FHA, it's 3.5% of the purchase price. USDA, there is none. VA, there is none. Okay, so remember, conventional, 3% minimum if you're a first-time home buyer. If you're not a first-time home buyer, it's 5%. Okay, FHA, 3.5% across the board. VA, there is none, and USDA, there is none. Keep that in mind. Okay, but those are the minimums that are out there. The number 4 asked question is, what is my credit score and how does it affect my interest rate? Guys, your credit score is a major factor in determining risk. Okay, if you can't pay that Hellcat every month and you got late payments on there, what makes you think I'm going to get you approved for a mortgage? All right, pay your bills on time. One of the strongest factors to get a higher score is payment history, right? So we want to make sure we pay our bills on time, which will give us the best score. The score also affects the interest rate. The higher risk you are, the higher rate you're going to get, okay? Because there's a chance you're going to default on your mortgage, and because you're going to default, it's going to cost us a lot more money. So we're going to charge you more up front. We're going to charge you more interest. We're going to charge you more in fees, right? Having a lower credit score can be expensive. Having bad credit is very expensive, right? So the better the score, the better the payment, the better the terms, right? The better your rates. It's overall just a lot better, okay? Now, what are closing costs and what do they include? This is the 5th most asked question that I get on a daily basis. What are closing costs? What's part of closing cost? Okay, let's take a look. So closing cost is not, once again, down payment. Okay, you may hear the term cash to close. If you hear the term cash to close, that means your total required money out of your pocket due and payable at closing, which can be down payment, closing costs, or any other fees associated with your loan. Okay, but closing costs is what's required usually to close your loan, which can be any lender fees. It can be what we call third-party fees, like your title company, right? It can be property taxes up front, 1 year of homeowners insurance, right? It can be HOA transfer fees. It can be taxes due for the remainder of the year. It could be any other fees that are associated with you acquiring this property. Okay, a lot of parties are involved in the transaction, and those people have to get paid, right? They're working, so they have to get paid. Those things are required by a mortgage company or by the state for us to facilitate a closing of your new home, right? So remember, there's also closing cost credits out there that you can attain or receive from the seller, possibly, depending upon the situation, right? Not all the time. Don't hold me to that, right? Or there's also programs you can use with the lender to get some of the closing costs covered, or pricing changes. It depends. But closing costs are the fees that you pay at closing outside of your required borrower obligation or investment, which is the down payment of the house. Down payment and closing cost are two different things. Okay. But I think those are my top 5 that I usually get on a daily basis.
Mhm.
And of course, there's dozens more, right?
Mhm.
But those are the top 5 that I usually see on a daily basis.
Excellent. Well, thank you. Thank you, Sean. Thank you for that. And you guys, if you have any questions, any additional questions, any concerns, definitely leave a comment, hit us up directly, hit Sean up if you need to directly. We'll definitely help you. Be sure to check out all of our social media platforms. Be sure to check us out on Facebook, Instagram, we're everywhere out here in these streets, but for sure, in the description is our direct contact information. Apply first. Hit the apply button for Sean. It's right under his name along with his phone number, and see how he can help you guys get the facts, no assumptions. But in the meantime, I'm going to wrap this up. Thank you for joining us on this live. Hopefully, we'll see you next Sunday. And again, I wish you guys the best of luck on your credit repair journey. Sean, do you want to take them out?
Once again, thanks for tuning in, guys. Questions or concerns, please visit my link in the bio. Don't be afraid to apply. Takes 5 minutes of your time. We do a soft pull on the credit to make sure no inquiries. Okay. Give us a call if you have any questions or concerns. Thanks a lot.